newsletters. The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do, looking at the DAX index. As you can see, we completed that ABCD pattern down at the 1.27 expansion. We've now rallied back, equaling the last rally that we had. That's been so far the high of the day in the DAX. But, it's been following the pattern, so we'll see how it goes. Now, we do have Stan Harley as our guest at the 9:30 break, but we've got a couple things to do here before we get to that. And the first thing we want to do is to take a look at some of these grain markets, folks. We've had a big break in these grains. And, before we do that, I have to share with you something really cool. This is from my doctor's office. I have to show you this. It's a butterfly. Hope I can get this up here. You'll see this butterfly collection that he has. These are Arizona butterflies that we have. And he has, I think, 8 different offices in his office complex there, and each one of them is a different theme. This one happens to be butterflies. He has another one which are Fibonacci shells, and then he has the 6 others are all related to sports: baseball, hockey, football, basketball, with all the autographs and stuff that he has over the years. It's really, really cool to go in and see him. So it's really fun to share this with you because it's an incredible butterfly collection. If you ever get to Phoenix or Scottsdale, Arizona, there's a butterfly museum there with live butterflies. It's like no other place other than the place in Thailand that I visited. And it shows all these fantastic butterflies live. And it's really a cool thing to do. Okay, let's move on here, folks. We've been talking about some of these grains here. This is from the newsletter that I send out each week of 24/7. We felt that we were going to get a little bit of a correction here in these grains, and this is what we're looking at here in the Christmas corn, December corn. That's new crop corn. If you'll notice that we had that 78% retracement last Tuesday, right after the moon, and then let's do this before last Thursday, and now we're coming down. We're setting right at the 78% level at the 380. We believe the ABCD structure is going to take us down to the 78% level of the whole move going back to last August, and that's down about another 8 or 10 cents. So keep an eye on that. There's a good possibility that we could reach that. The weather has broken across the Midwest. Are starting to get rains along with cooler weather. And, of course, the soybeans have lost 63 cents just since yesterday. And that sets up a very interesting one that we've been watching for this potential week, is to keep an eye on these beans here. This is going to be a real interesting one because we'd be down into this gap area. If you'll notice the gap that we had in mid-June, that was at the crop report, of course, and then you had the big move up. And that would be a 61% retracement pullback. And if you look at this chart closely, you'll also see that there's an ABCD Gartley forming down here at around 960. Right now, we're trading at around 987 in the beans, so keep an eye on that one. One of the questions that I had for today was about the euro. We were talking about that euro at the 117 level yesterday. It broke all the way down to the 116 levels, had a little bit of a bounce back. So what you'd be watching is to watch for an ABCD structure using a 15-minute or 30-minute chart to see if you get an ABCD rally back where it would offer you a good place to, get a short position on. Another one that looks very interesting here, folks, is the dollar yen up at this let's get this right, 113 level. We came within about 4 pips of the exact number, which was a 618, 382, and 78% level of previous swings. So watch that one very, very closely too. And also, if you happen to be in that cattle trade that we were looking at, cattle have already broken, well over $1,500 to the downside, and it looks like they're going to be heading down another 3 cents or so down to that 110 level in the August cattle. But that's just a prediction. The Treasury bonds and Treasury notes have certainly said that was some type of a major high last Thursday or Friday, and we've broken very quickly. We've dropped over 2 handles in bonds already, and 1 handle in notes, which is quite a bit. As a matter of fact, if you're in that trade and you go below those previous lows at 151 in the Treasury bonds, I wouldn't be opposed to adding to that position, because it's got a real chance, to see if the market is going to, break down into this lower level. That it certainly has a lot of reasons to get to that level in both the bonds and notes. I've had a request to take a look at a couple of Dow stocks today that are giving their earnings out. The first one we're going to look at here is Caterpillar. This is a weekly chart on Caterpillar, and as you can see here, we had a really nice 135 pattern, way back in December that worked for about 10%, a little more than 10%, and then the market, of course, went back above it, and now we're approaching, I believe we're taking out the highs of 2011. And that'll be probably some type of resistance, maybe, maybe not. It's still, these markets are so related to algorithmic trading now that once the trend starts, it just keeps going. Let's just get this other one up here that we want to look at. This is Mickey D's. We want to put this one up here, McDonald's, and take a look at it. This is interesting for 2 reasons, one of which is the fact that we had that beautiful ABCD pattern, as you can see down there at that 109 level. That was a 50% retracement of the whole move. It was a perfect ABCD, and this was on a weekly chart, folks. And now, as you can see, we have completed the ABCD pattern. In fact, we've gone above it by about 5% because of the earnings that came out. But that's the pattern that we're looking at in some of these. So they've certainly been, fulfilling some of the things that we're watching. Regarding the gold, I believe that the gold is going to get down to the at least to the 1242. If we get below 1242 in the gold, then I would say that there's something probably going to be a little bit of a problem in the gold market. So watch that 1242 level very, very closely. That's down $17 from the high. That's the 1/2 of the harmonic number. It's doing it very quietly, which is good, but 1242 would be interesting because you'd be taking out the previous day's low, and you'd be making a 1.27 of that move. So your risk there would be rather small. So just watch that one also. It's a very interesting thing to see. It unfold, but we'll watch it closely. As far as the dollar index, I wanted to bring this up to you because we did hit something pretty important yesterday. Just as that euro was making the new high, the dollar index was making a 1.27 expansion of the low from election night back on November the 8th. So, and if you'll notice the ABCD structures there's 3 of them all in a row, and all coming in around this 93.60 level. But, once we went below that 95.40, that was a bad sign. So we're going to see what this does. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've been asked to take a look at Minneapolis wheat. This is the one that started the whole weather market. As you can see, it had the biggest move, rallied well over $3 a bushel. And, of course, it's a much smaller market than the other markets, spring wheat. Anyway, you'll notice that we had a beautiful Gartley pattern there. The market hit that level and rallied, well over 50 cents a bushel. And then yesterday, with the weather breaking, you can see that it closed below the 382 for the first time. This sets up another ABCD structure that would take it down to around the $7 a bushel level in Minneapolis wheat. Folks, I don't recommend trading Minneapolis wheat. You have enough fun trading December wheat, and so I would not touch this at all. Regarding that December wheat, it had some support there at that 508, but, a nickel below that, and it has no support. And that's why, you want to stand aside, because once these numbers start to break, you don't know where they're going to go. We see this a lot in these markets, especially the stock market. Once they go higher, they just keep going higher. Stick with the things that work. That's the best thing. Keep your losses as small as possible. That's really what you want to be trying to look at as you're going through some of these things. Let's take another one that's going to be in the news today that we follow quite a bit, and that is the old slippery one, the old crude oil. We'll put this up and take a look at it. We'll bring this up here and watch it. Folks, regarding the wheat, beans, and corn, the ones that I'm watching, the corn, the wheat has some more support down about another 15 cents. But the ones that look the most interesting to me are the credit. Let's get this right. Is the soybeans and the corn. They're much bigger markets than the wheat, and those are the ones that have the nicest pattern that I can see as we look at some of these things. So just keep an eye on it. We made some new low in bonds now, I believe. No, that's the notes. The notes have just made, nope, it is the bond. The bond just made new low below yesterday's low. We're at the 78% level now. Below that, folks, interest rates are going higher. I know the Fed is in there jawboning today, but frankly, these notes and bonds have already told us that they certainly want to move, to the downside, i.e., higher interest rates. So we'll see if that's the case. But the Fed is in there today, and they can certainly move the market. But let's look at the crude oil chart for just a second. As you can see, we had an ABCD structure on the downside back on July the 9th. That was right at within about 20 pips of the exact 61% retracement at 44. We had a move that took out the old highs, and then we backed off one more time. And it was very similar to the back off that we had during the time of July. It was about half of that. It was right at the 50% retracement. And now you can see the ABCD pattern is coming in right at this 48.80, 48.60 level. And so it's going to be interesting to see what happens with crude oil at this point. This is a Gartley pattern, folks. This is an ABCD pattern in a bear market. We've had looking long term, of course. You'll know that the long-term chart on the crude oil has been going down. This is a bear market. This is a Gartley in a bear market. So watch this level very, very closely here, because this is a completed pattern. You could also make the case from July, all of July, and then the pullback that we had just 4 days ago was also an ABCD, and that would take us possibly almost to the $50 barrel. So watch it closely in here, because there are two patterns that we'll be watching crude oil for a potential turn, because it's an ABCD structure in a bear market, and it's also something, to pay, relatively close attention to, as we, hold on one second, as we look at some of these things unfold. Okay, now the next one that I wanted to do here is the, hold on, where is it? Don't run away from me, please. Oh, I did the gold, I did everything else. What did I do wrong today? Oh, dear. Oh, here it is. This is the one I want to look at. This is the really big one here. This is Boeing Airlines. Let's just put this one up to take a look at it. I did post crude, didn't I? Uh-oh, sorry. Give me a second here. Let me repost the crude. I thought that I did. 1 second. Here it is. I got it right here. I thought that I did it. Let's just move on. Sorry about that, Mr. Bill. Anyway, there we go. There's, you see the ABCD structure that we're looking at, and you can see the other ABCD structure right afterwards from all of July, the pullback last week to the 45.60 level, and then here we are. Getting up to this another ABCD level right in here. Remember, the larger ABCD pattern takes precedence over the smaller ABCD pattern. That's because it's a bigger cycle, and it should have more power. So remind yourself that that's what you're looking at, because, you got to be close, folks. You're not going to be perfect on these darn things. I mean, it's just this one thing after another. Just remember, here's what we did in crude oil last week. If you remember, we were looking for crude oil to back off to that exact level of 45, and look what it went to. Went right down to 45.13. That was spot on to a 61% retracement of the low of last of July. So that's why you've got to be able to look at some of these and try to figure out, 45.40 was the low. You're right, 45.40 was the low, and it was within, 17 points of the exact number, but, that's neither here nor there. All right, we want to keep an eye on a couple other things. With the Fed in there today, I don't think they're going to raise rates, but they could just because they want to, but I don't think it'll make any difference. The market's already telling us that it wants to raise rates, and this is a very large market, folks. This is the largest, the Treasury note is the largest of all the commodity markets we trade. Of course, foreign exchange is many, many times bigger than that, but we don't know the numbers on that because those come from private banks, and we really don't understand where all those numbers come from. The other one that looks really interesting here is the Japanese yen. We had a really nice rally last night, and I believe that we've got a chance here. If we can get below the 111 level, just 1 second. Well, this is really hard to trade this today with the Fed, folks, because it's really really going to be something. Well, Mr. Rhodes, we're going to have to put a hat on you, buddy, for an 8,500 8,500 price objective for the Nasdaq. They should have a big party if we get to that one. Wow, 8,500. That would be equivalent to what we did in the .com bubble. Well, that's good. If it hits it, may God bless. You know, I've seen crazier things. I've seen crazier things. Let me get this dollar yen up here. Hold on a second here. The one thing is, it's not going to go straight up. It'll probably have one or two corrections before it gets to 8,500. That would put the Dow. That would probably put the Dow at about 25 or 26,000, I would believe. And, we'll see if that will be in Trump's second term when they have the second Trump bump, I guess. We'll watch those at the same time. Regarding this U.S. dollar and the dollar yen, these are just critical levels, folks. We're seeing them everywhere. We're seeing them in the Australian dollar, and we're seeing them in all the other things that we have going on in these markets. One of the questions is about the gold. Folks, all I'm looking at is the gold is to watch for the big ABCD corrections. We had a good one yesterday. It didn't hold 1250, so I'm looking at 1242 as the next level. Stay tuned for Stan Harley.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our guest today as Stan Harley. Stan, are you there?
Good morning, Larry.
How are you?
I'm doing awesome.
Listen, I hate to put you on the spot, but you're going to have to answer a very interesting question from one of our listeners this morning.
Okay.
Are you ready?
Please. Absolutely.
Why aren't you right all the time? I know you've won all kinds of awards. You're one of the top timers in stocks and also in bonds, by the way. Congratulations for that. I think you're number 8 out of 250 people, so that's pretty good. But the question is, why aren't you right all the time? I mean, I'm anxious to hear that answer myself. Yeah,
let me get back to you on that next week, if I may, please.
Yeah, okay, sure. Oh, go ahead. I've got your first chart up about your 26-day trading cycle highs. You want to go ahead and start with that?
Absolutely, Larry. We've had one heck of a powerful run here since the November election lows, and go back even further since the February 2016 bottom in the stock market. I'm talking about, of course, the 2,500 area, basis the S&P cash, is I think is going to be formidable resistance. We're getting very close to it, so I would expect the slope to start leveling off here. And will probably evolve into more of a sideways pattern than the straight up fare that we've been undergoing. Since the November bottom, interestingly, we have had a pattern of making cycle highs at every 26 trading days on average. Sometimes it's 23, sometimes it's 29. Mm-hmm. But, Larry, the average has been right at 26 trading days. Mm-hmm. We had a low in mid-December, then late January, then the 1st of March, early April, and so on. The last one was on the 19th of June, and doing a little regression analysis, it points to today, plus or minus about 2 to 3 trading days for the next high in that series. So
could you give us
the potential for a high, like either today or tomorrow or the next day, very, 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 very soon here.
Would it be too much to ask to give me the exact time today that it's going to top, say within 10 minutes or maybe even 20 minutes? I'm joking with you, Stan.
let me get back to you on that one, Larry, if I may.
I can certainly understand that one, but you and I have been doing this for a long time, and this has been one of the most explosive moves we've had, especially the one from election night. I mean, that was the easiest one to see because we hit so many things that were so important, along with the cycles. And of course, we've had a tremendous run here, but the whole world is thinking there's never going to be a correction, and that's usually a bad sign. It's my guess, but we'll have to wait and see. Now, Stan, one of the questions that someone is asking is, do you look at the relationship between new highs and new lows and advanced decline lines? Do you use that as part of your analysis?
Absolutely. I look at non-price-based market internals. And for listeners not familiar with that concept, it's looking at advances and declines, new highs and new lows. I construct an advanced decline line. I also look at a overbought, oversold indicator, which is measured by calculating a 10-day and a 30-day moving average of the net difference between advances and declines, and plot that on a graph. I look at new highs and new lows, 52-week new highs, new lows. I subtract the two and calculate a running summation of that, just as I do with the advanced decline line. And then I also look at a 10-day and 30-day moving average of the net difference between new highs and new lows. So these indicators are not price-based, but they kind of give us a peek under the hood, as it were, and give me some sense of overbought or oversold, and I also look for divergences in those things. Interestingly enough, not a lot of divergence among the market internals right now. And indeed, among the what I call the big five, the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ comp, and the New York comp, we don't have a lot of divergent structure there, other than to point out the Dow Transports right now are lagging a little bit. How meaningful that will be is a little bit early to say. As I said earlier, I think we are putting in a high this week. There's a Fed meeting today. It's conceivable that whatever comes out of the Fed is said or not said may provide the fundamental catalyst. I don't know. But if we don't put in a high this week, let's say this 26-day cycle fails to occur this time, and cycles do that, as you know, Larry. Sometimes they skip a beat. Then the August 7th to the 9th time period is really showing up on my radar screen. I have a lot of work in that area that we'll discuss here shortly that would suggest if we don't make a high here, then we're going to continue into that time period. On the other hand, if it turns out we do make a high this week, then I would suggest that August 7th to the 9th would be a good candidate for a spike down, washout low. And that's my favorite scenario, Larry. I'm looking, my preferred scenario says we make a high this week, predicated on this 26-day cycle and a few other things. And then we roll over and make some kind of a washout low in the August 7th, 9th time period.
Mm-hmm. Okay, that's pretty good information, because you've been spot on some of these over the months. You've certainly done very well, but like all of us, there are sometimes like it skips a beat, and those are the ones you have to stand away from. But we have a question about the bond market, Stan, and I know you've been one of the top bond timers. Our work is saying that rates are getting ready to go higher. What's your feeling on the bonds here?
I have a different view, Larry. I think we're in a long-term bond bull market or bear market from the interest rate perspective. We're doing a little back and fill structure right now. But I think longer term, I think we're going to head higher. From a long-term perspective, and we discussed this on the air before, I found very, very solid evidence of a 40-year cycle in the bond market going back to the 1800s. Last pivotal turn in that cycle occurred in 1981. Prior to that, it was 1940. Prior to that, it was 1900. Should the pattern continue, and I believe it probably will, that would suggest the next turn in that market in the 2021 time period. I think it's going to expand a little bit into 2022. No, I think bonds are heading higher. In the short term, I think we've got some back and fill structure to undergo. The TLT, which is a good proxy for trading the bond market on the equity side of the house, is doing a little back and fill either side of the 125 area. 125 is resistance right now, but I think ultimately we'll break through it, and I think bonds are going to head higher, Larry.
Mm-hmm. Okay, but short term, there could be a little bit of a correction in here. Of course, when you look at this over a long period of time, we had a high of 177. And we've been down as low as 150, so there's a pretty big trading range in that group for sure.
There is. I'm not looking near term. I'm not looking for so much of a correction as I am more of a back and fill structure.
Okay, stay with us, Stan.
I don't mean sideways.
Yeah. Okay, stay with us for one more segment, please.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and someone's asked a question. Stan, do you do anything in crude oil?
I do. I believe crude oil is in a primary bear market, and I'm looking for crude to bottom in November of next year. So I would sell the rallies here and have an eye towards initiating a major long position about 15 months from now.
Okay. Well, that's a pretty long bear market, and it's been going on for quite some time. Do you have any price projections that you're looking at down there?
No, I don't, Larry. We're hovering we're just right around the 50 mark right now. Mm-hmm. Perhaps the mid-20s. That's just conjecture at this point. Mm-hmm. Time is difficult enough to forecast. Projecting price out that far is a little dicey. But I think, I think the entire crude complex, gasoline, unleaded gas, and so forth, are in a primary bear. And we have, about another 15 months or so to go before this thing ends, and then we're going to turn higher.
So you're looking around 2018 in November?
Yes, for a major bottom in crude oil. Yes, I am.
Okay, we won't hold you to that one. We'll hold you to all the other ones. That one will leave a little bit more flexible. Okay, Stan,
I'm sorry, go ahead, please.
No, I posted the chart about your 112-day cycle, and I wanted to, that's basically 4 times the 26. Is that correct? Pretty much cycle high type thing?
I guess it is. Larry hadn't thought of that. With respect to the chart, the market has, over the last many years, has been making highs at 112.2 trading day intervals on average. December of 2014, May of 2015, November of 2015, August of 2016, and so on. The last one in that cyclical series was March 1st of this year. Adding another 112 days to that takes us to about August 8th, plus or minus a couple, 2 or 3 days.
Wow.
Now, what is interesting here is another cyclical series that you and I have talked about here on the air is also due in this exact same time period, and that averages 93 trading days. That cycle was responsible for the February 2016 bottom. It was responsible for the Brexit low in June of last year, the November election bottom, then the low we had in late March of this year, and it is due once again in the August 7th to the 9th time period. That's what I want to see as a technician. I want to see a clustering of a number of very significant cycles within, 3-4 trading days of each other. Well, here's the interesting paradox. We have that 112-day cycle, which has characteristically been making highs, and that 93-day cycle, which has been historically making lows, both due in the same time period. So which is it going to be, a high or a low?
That's true. You know what's amazing? What's amazing?
And to respond to that, I would say that cyclical functions should be thought of not as a simple high to high or low to low. That can change. More importantly, they should be viewed as a trend change, an indication of trend change. So,
yes,
I'm looking at that time period, and I want to fade that whatever happens going into that pivotal turn.
Mm-hmm. Stan, when I look at your chart here, it reminds me when I first started looking at cycles, way back in the 1969, 1970 era like you did. But what's amazing is that if people would just do this work themselves, they would be able to discover some of these, because as you can see by these red and blue arrows, these are certainly not random. I mean, they occur over and over again, but if you look at it closely and try to find them, they're right there. Now, they don't work all the time, as we've mentioned before, but they work a great deal of the time. And if you add it with a few things like Fibonacci retracements or some type of a pattern, it'll give you a pretty good idea that this would be a good place to buy or a good place to sell. So don't be afraid to do the work yourself, folks. It's against human nature to do it, but do the work yourself. And then you'll have something that you can believe in, because then you don't have to listen to anybody else. But most people are they just don't want to do the work. But I know you've done the work through the years, and I certainly appreciate you having as a guest here. Now, we have I don't know if I've asked the question about the gold. Did I ask you about the gold? I think I did, didn't I?
We haven't discussed gold today.
No, gold. That was my next question. I had it written down here. Someone asked a question. What's your feeling here on the gold market?
Gold, like the crude oil, is in my judgment, is in a primary bear market. Although since December of last year, we've been in a counter trend move higher. And the pattern right now reminds me a lot of what happened following the 1980 peak in gold. Mm-hmm. And the 2011 peak, I think, was analogous to that. Gold back then made a spike high, and then it had a sharp wash down low, and then it popped back up and kind of went sideways for a bit and then rolled lower. I see essentially the same structure happening here, where the summer high in 2011 was essentially analogous to the January 1980 high. We've had a sharp spike down low, a counter trend move up. I'm not looking for a whole lot higher. The 1250 area is, I think, going to prove to be formidable resistance. I'm looking for some more sideways structure here, but eventually we're going to roll over and head south. I'm looking for a break of 1,000 at the final bear market bottom. At the very, very least, we should tag the 873 area, which was the January 1980 high, and probably go a little lower. And 750-ish would be my target at the final bear market bottom.
Boy, that'd be down $1,200 an ounce from the high at 1932. That'd be one heck of a move. But boy, that move in 1980 was certainly historical. I remember that very, very vividly. I was involved in that every day. Yeah, well, I can certainly see this in the gold, because if we crack below that 1190 level, that will certainly set up some of those levels without too much trouble. At least I think so. Now, Stan, if the folks want to get a sample of your letter, what's the best way for them to reach you?
I have a website, Larry, at www.harleymarketletter.com, and folks can log on there and find out information on it, and they can contact me directly. It has my email address on there as well.
Yeah. You still live out in Ventura County, don't you live out by Moore Park someplace?
I do. I'm in the Thousand Oaks area in California.
Well,
the folks back in Boston, that's northwest of downtown LA, about 60 miles.
Yeah, that's a really nice place. That's where the Reagan Library is out there somewhere, isn't it?
Yeah. Yes, the Ronald Reagan Library is maybe 7-8 miles from where I'm sitting right here at this moment.
Oh, well, that's good. Well, one of these days when I get to go to see my grandson, I'm going to stop by, give you a call, and we'll meet, because I haven't seen you in a long time. I'd certainly like to get back together with you, because we used to bump into each other all the time back in the old days. We had those meetings, and it was a lot of fun. A lot of famous people who went to those meetings, but God, that's 40 years ago, Stan. It's hard to believe, isn't it?
No comment.
Yeah, I understand. I understand. You know, I actually spoke. Do you remember Chuck Plank by any chance? Do you remember the fellow who did some Fibonacci work out in the valley somewhere? But he was one of my customers at Drexel. I ran into him the other day, and he's 92, so it's and he's still trading. So that's still a good thing. Listen, thanks for joining us, Stan. We really appreciate it, my friend. We'll have you on soon.
Thank you, Larry. My pleasure.
Stan Harley, Stan Harley Stock Market Letter.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the Dow up 115 so far anyway, with the help of Caterpillar and Boeing Airlines and one other one. I can't remember which one it is, but we got gold down $4, and we'll see, what happens with some of these other markets. The bonds are down just a little bit. The notes are basically just about unchanged, and so we'll see how some of these things unfold here before the end of the day. One of the other things that I wanted to mention, someone's asked a question, have I ever been around anybody who died while trading? Well, there probably been a lot of them, but they might have died at that time, but the death was postponed due to other circumstances. But as far as actually taking their last breath while trading, I have never seen that. I've heard stories. One of the fellow that owned Commodity Perspective evidently was trading during lunchtime at the Chicago Mercantile Exchange in the lunchroom there, and had nothing to do. He had a big position on, and he was winning big. It just that his heart gave out. What was his name? His name was Art. I can't remember it. And then Robert Krause, who was married to Jeannie Long with the Fibonacci Galactic Trader. He was at a meeting in Chicago and was not trading, of course, but just giving a lecture. He had just finished his lecture. He had sat down, and before he just sat down, and he had not been in the chair more than just a few seconds, and someone reached over to congratulate him on his talk, and he had died that quickly. He had a massive coronary and died instantly. So those, we're all going to die, folks. That's much we're 100% sure of. That's not going to change. But whether we die during trading or not, I don't know. Frankly, people that trade a long time, believe me, the trading is not related to the money part. I mean, if you lose money, you can always make it back. You die because, you lose a child or something that's real serious in life, but you don't die because you lose some money in the market, because you can always make that back. So if a person dies, it's not because of trading. Trading is actually not very stressful or anything if you do it the correct way. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.